Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. Hope you all had a fantastic weekend and are ready for another week of market insights.
Absolutely, Ethan. We've got some interesting data to unpack today from our AI models based on market activity and social discussions from yesterday, March 1st, 2026.
That's right. Our systems flagged quite a few stocks yesterday, with significant chatter around 6 different companies. We saw a pretty mixed bag of sentiment, indicating both promising opportunities and some serious caution for investors looking for that next big winner.
Indeed. While some companies are showing strong underlying growth, others are flashing some very distinct risk signals that we need to pay close attention to. Today, we're going to dive deep into 2 of the most discussed names that generated enough specific AI-generated analysis for us to really dig into. Let's kick things off with Microsoft, MSFT. The AI analysis here suggested a buy recommendation. What's looking good, Ethan?
Well, Microsoft has been a long-time darling for a reason. The AI-driven insights highlight phenomenal metrics. We're talking 16.7% revenue growth for a company of its size, a nearly 40% net profit margin, and an incredible return on equity over 34%. These are just stellar numbers for any company, let alone with a market cap of nearly $3 trillion. The news about their AI dominance with Copilot and Azure expansion, it just reinforces that growth story. Plus, insider buying activity suggests confidence. And the current price is actually closer to its 52-week low, which could be a great entry point. We've had a strong history of buy ratings for Microsoft, only one stay away back in January.
I hear you, Ethan. Those are indeed impressive figures, especially the profitability and efficiency. But we have to acknowledge that PE ratio around 24.58. It suggests expectations are already baked in. And while the debt-to-equity ratio is likely a clerical error at 31.539, it's a reminder that even the best companies have numbers to scrutinize. My primary concern is that a high valuation requires flawless execution, and any stumble could be heavily penalized. However, the consistent, strong KPIs and clear strategic direction in AI definitely make a compelling argument.
So, all things considered, given that fundamental strength and clear growth runway, I think it's fair to say that the AI-generated insights classify Microsoft as a solid buy for investors with a long-term horizon.
Agreed. It continues to demonstrate robust performance.
All right, next up, let's talk about NVIDIA, NVDA. This one's a bit of a roller coaster in our reports today. One post, How to Make Money Being Wrong, NVDA Q4 Actuals and Accuracy Review, actually had a very bullish take. The author explicitly stated they're still bullish, citing significantly beaten Q4 revenue and EPS and excellent guidance. They even argued it's a better value now for long-term believers, with a projected forward PE ratio around 20x for FY27. Those are some powerful growth signals, 73.2% revenue growth and 55.6% net profit margin.
I see those numbers, Ethan, and they are indeed eye-popping. But the AI also picked up 2 other discussions on NVIDIA today, one neutral and one that was decidedly bearish, with users advising panic selling after a recent dip. And when we look at the KPIs beyond just growth and profit, some red flags appear. The PE is still high at 36, signaling a lot of future growth is priced in. More concerning is the extremely high debt-to-equity ratio of 7.255, which implies significant financial leverage. Then there's the insider selling. Over 2.8 million net shares sold in the last 6 months. That's a pretty strong signal from those who know the company best.
It's true. Michael Burry's comparison to Cisco's dot-com peak is definitely a cautionary tale, and the high beta of 2.314 means this stock is going to swing hard. But the innovation, the sovereign AI deals, the Meta alliance, they all point to continued demand. It's a leading player in a transformative technology.
While the long-term vision is compelling, the current risk profile, especially with the high debt, substantial insider selling, and extreme volatility, coupled with recent bearish user sentiment, suggests caution. The market might be looking for a shift towards AI software, too. Our AI insights are leaning towards a very cautious approach. So, despite the undeniable growth potential, for today's market commentary, the overwhelming risk signals and conflicting sentiment means our AI suggests that NVIDIA is a stay away for now for general investors. The volatility and the red flags demand extreme caution. So, to recap our AI-generated insights from today's analysis, here are the stocks we suggest you consider for deeper research. Investigate as buy, Microsoft, MSFT. Investigate as cautious buy, none. Investigate as speculative gamble, NVIDIA, NVDA. And that brings us to the end of today's Daily Hunt. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thank you for joining us today. We'll be back tomorrow with more AI-generated market commentary.
Until then, happy hunting.